everybody. Welcome to today's special webinar, our annual webinar when we reflect on the year that's been and we give you some idea of what we expect to happen in the year to come in 2025. Hi, I'm Terry Ryder, founder of Hotspotting, and I'm joined today by Hotspotting General Manager Tim Graham. Between the two of us, we've got something like 60 years experience in real estate investment and analysis, and we're hoping to give you some of the benefits of that today as we review the year that's been and also give you some idea what we expect to happen in 2025. Tim, welcome.
Thank you, Terry. When you say that the combined experiences between us is that high, it reminds me of what they said in the NBA recently with LeBron James and his son just joining the league. I think between them they had about 3,500 points, and the son had two of those. But so I think you get the lion's share of the experience between us. But
Yeah, well,
happy to contribute.
Thanks for pointing out my much greater age, Tim.
Not,
And
not your age, your experience.
experience and wisdom that's been gained along the way.
Yeah.
Hoping to give our audience today some of the benefits of our collective experience in real estate over time, and in particular our analysis of what's been happening, what we expect to happen. This is an annual event. We have a reflections and projections webinar at this time each year. The equivalent webinar last year was our most popular, best attended webinar of the year. And we've certainly got great numbers of people tuning in for this one today. So let's start by having a look at what happened last year, and probably worth making the point that it was a year that surprised some people. It didn't surprise us, but it certainly surprised the bank economists who started the year by predicting that property prices were going to be falling across Australia, as they did the previous year. They started both the 2023 and 2024 with forecasts of prices falling quite significantly, in fact, this year and the previous year. And obviously they got it horribly wrong, particularly in some specific markets across the country. We think it's because they place way too much emphasis on the impact of what's happening with interest rates. Their rationale was basically that because interest rates were stubbornly high and showing no sign of coming down, that we expected prices to fall. But obviously in key markets, that did not happen.
Yeah.
And it might be an opportune time for you to actually share your screen and show us what did happen in 2024, according to PropTrack.
Okie dokie. Where are we? All right. So if we were to have a bit of a reflection on the last 12 months, according to PropTrack, the national average for dwellings across Australia grew by 5.53%, capital cities 5.55%, and regional areas 5.48%. No surprise to see that Perth was at the top of the list in terms of annual growth with 18.74%, followed by rest of regional Western Australia, and then notable mentions of Adelaide and Brisbane rather, having strong years as well. There's obviously a stark difference there, Terry, between the national average and the high performers. And something we're going to talk about today is our predictions going back 12 months ago for what we expected to happen in 2024 with our National Best Buyers report. We chose 10 locations, 10 LGAs that we thought would outperform the market. And the results are in, and 9 out of our 10 selections were basically triple the national average, which is great. The one that didn't quite get there was still 11%, which is nothing to shy away from. So a really strong year in our predictions, which is fantastic.
Yeah. So there's some key points that are evident in those figures. And the first is the stark differences from one market to another. Far too often we have news media talking about the Australian property market. We're going to be having in the next couple of months lots of economists making their predictions what will happen for what they call Australian property prices in the next 12 months. And the point that we're at pains to make at Hotspotting is that there is no Australian property market. We have vast differences from one city to another and from one regional market to another. That's because we believe fundamentally that real estate is local in nature, and it's what's happening in the underlying economy, which is the key factor. Now, if you follow the CommSec State of the States report, as I do, every quarter they publish their State of the States report where they rank the 8 state and territories economies according to 7 or 8 different metrics. And for the last probably 2 years, the leading economies in the country, according to that ranking system, have been Western Australia, South Australia, and Queensland. No surprises then to us that the leading capital city markets on price growth by far have been Perth, Adelaide, and Brisbane, and the leading regional markets have been Western Australia, South Australia, and Queensland. Those economies that have performed poorly, like the Northern Territory, Tasmania, the ACT, and Victoria, those capital cities and those regional markets have had no growth, and in some cases, particularly in Melbourne and Victoria, we're seeing a slight decline in median house prices. And it's not a coincidence. There is a strong linkage between the underlying economy and local areas and the performance of property markets.
Yeah, absolutely. And then the only other things I'd note on here is that we've seen Brisbane overtake Melbourne in terms of the median value of dwellings, but also Adelaide has just recently taken over Melbourne as well. So Melbourne, as you can see, really fallen behind with a state government that is putting us further and further into turmoil, unfortunately. But there's probably a whole webinar on that.
Absolutely right. It's a whole other webinar. Let's not get distracted. It's an opportune time, however, to have a look at what we were forecasting this time last year in contrast to what some of the big bank economists were forecasting. They told us to expect prices to be falling across the board. We didn't think that was the case. We were forecasting general growth in the market as a national average, but in particular in specific locations. And as I've said, real estate markets are very location specific. We did expect outperformance. Tim, perhaps you could talk us through some of the results from the Best Buys report that we published this time last year.
Yeah, so as most people on this webinar probably know, we focus more on local government areas, LGAs, when we make our predictions. So from the Best Buy's top 10 that we chose last time, here's a bit of a mixture of suburbs within the LGAs that we chose. But you'll notice here, in terms of the average purchase price down the bottom here, the median prices of those suburbs are around 640,000. With the median in 2024 now being 859,500, which is an average growth of about 21%. And as I said before, if you sort of compare that to the national dwelling average of 5.53%, you quadrupled the national average. So a really strong result in terms of our predictions. As I said, it ranges from 11% as our weakest all the way through to 29%. And as I say, when you're looking at some of these averages, it'd be hard for a lot of people to sort of fathom getting, 100 grand worth of growth in a $325,000 market. But
Yeah.
these are it really does go to show you don't have to be in these blue chip areas to achieve growth. But also you'll notice with the asterisks here, they denote unit markets, and this is a trend that Hotspotting's been talking about for some time now, where the old adage that you need land in order to get growth just isn't the case, Terry.
Absolutely not. I tend to think that what we call the rise and rise of apartments, more and more buying cohorts opting for units, townhouses, apartments as a choice for lifestyle reasons, for affordability reasons. Quite a long list of reasons why people are making that choice, but more and more people are making the choice to buy attached dwellings rather than detached houses on land. And that's starting to change the dominant paradigm that's always existed, that houses on land show better capital growth. We're now starting to see unit markets increasingly challenging that and overtaking. In fact, there are many locations around Australia now where in the past 12 months and in the past 5 years, the capital growth for units in that location have been better than the capital growth for houses. So that is one of the key points that's evident from that list of the locations that we selected in our Best Buys report 12 months ago. Other points are there is a mixture there of regional markets and capital city markets. There is a mixture of house markets and unit markets, but locations right around the country, including outperformers in markets that overall haven't really performed that well, generally speaking, particularly Melbourne. But we do see as part of that trend towards high demand for well-located units, that some of those inner city Melbourne markets are going to have high demand. And we did see some of them actually performing extremely well on capital growth at a time when Melbourne prices have been fairly stagnant.
Yeah. Well, look, it's something we talk about all the time, Terry, is that markets are cyclical, and there's plenty of places on here that sort of stand out as markets that today would probably say are starting to reach a peak, and I know we'll touch on that a little bit later. But it goes to show that if you're buying at the right time using our price predicting index formula, you really can take advantage of buying well. So a lot of people are trying to achieve growth in the first couple of years, and of course when you look at these figures here, you might be looking at 20 to 30% growth in a year in the way of uplift. But if you're also buying in markets that aren't overheated, you get a discount in growth on the other side as well by buying well. And that's something we're going to talk about in moving forward into 2025, about not really trying to focus on these markets that are hyped markets and overheated. So when people do get a look at our top 10 best buys for 2025, they might be surprised to see that a lot of these areas aren't the ones that they're hearing about at the barbecue chat.
Absolutely right. We were quite deliberately not included frenzied markets, overheated markets, markets at the peak of their cycle in our choices for 2025. But it's probably an opportune time to also look at what we were selecting a number of years ago, because one of the parameters that we use for selecting locations is that we're not looking for short-term growth in our hotspots report. We're making choices which we think are going to outperform over the longer term. It's just a bonus that most of the locations we chose this time last year have had very good short-term growth as well, but we were selecting them primarily for their credentials for long-term growth. And what you're highlighting there is the equivalent report that was published back in 2017. It was the first time that we actually featured a precinct in the Perth market, well ahead of the boom that we've seen over the last 3 years.
And I mean, this is a really good time to sort of talk about the fact that, you can't rely on the past to predict the future. If you were to, say, listen, let's only invest in places that have shown strong track record of growth, you'd miss out on massive opportunities like this. So by putting this in here for our viewers today, it's to understand that in order for a location to make it into a top 10 report by Hotspotting, we need to see change. And this is a really good example of the price predicting index monitoring sales volumes increasing in the area, seeing strong infrastructure coming into the area, and obviously a really good price point for our investors to jump in. So back when this report was produced, the suburb itself of Joondalup actually had typical prices around the 370,000 mark. And if you look at the 5-year trend, we're starting back here, and you can look to today's median price value of 802,500. Now, that's not by fluke. That's by monitoring data and looking at what's happening in the local area. Some of the highlights of the area back in 2017, you can sort of see at the top of the left-hand side of screen. But one of the trends, the reason we're bringing this up today is because something we're very mindful of at Hotspotting is not only showing people where to buy for growth, but also to be aware that markets being cyclical do reach a peak. They do start to level off or even soften for some time. And we've started to see that the Perth market has reached a peak in a lot of areas, and we're starting to see declining sales volumes. And that to us is a precursor to price movement. When we start to see sales volumes decreasing, prices often soften. And our concern is when you look at, and if anybody's wondering where this data comes from, this is some screenshots from our Hotspotting members portal. And you can see we sort of gamify this a little bit by showing you with, in the way of the flames, how hot a market is. So this market we see as a declining market in terms of sales volumes, but yet, listings are selling within 10 days, and that's alarming to us.
Yep. It certainly is. There's actually a growing body of evidence, Tim, that the Perth market overall has reached or passed its peak. We're starting to see significant evidence that sales activity is falling away at a time when listings are rising strongly. So in the past, the answer to our finding that sales activity was falling was that, well, there's a shortage of listings. Well, that's much less so now in the Perth market. In the last 2 to 3 months, we've seen a significant rise in the listings of properties for sale, but nevertheless, we're seeing sales activity falling away. The rate of price growth month by month is declining. It's still high in annual terms, but the month-to-month rate that's shown up by the data from PropTrack and also from CoreLogic, it's diminishing. Vacancy rates are gradually increasing because there's so many investors have bought in the Perth market and made those properties available for rental. The Real Estate Institute of Western Australia reports that rents in Perth actually haven't sort of changed since about March of this year. So rents are pretty static. So there's a number of indicators. People are at the coalface of the industry in Perth. I saw something reported in our newsfeed this morning that increasing number of commentators in the Perth market are believing that the market is now fully priced and is at its peak. So the message that we want to convey to people is that if you're looking to buy early in 2025 or sometime in the next 12 months, that you should be very, very cautious about jumping into a frenzied market like Perth, because we believe it is very much at or past its peak. And there are some other markets in Australia that we might classify similarly. And it's because of those reasons, amongst others, that our choices for the National Top 10 Best Buys report for 2025, which we'll talk about as we go through this presentation, it doesn't include any of those frenzied markets. Nowhere in Perth amongst our top 10, nor in Adelaide, which has been a very strong market for the past several years, nor some of those very, very hot regional Queensland markets that investors are now piling into, like Rockhampton and Townsville. So time to be very careful about your locational choice and to think very careful about your reasons for wanting to get into a market. I'd just like to share my screen and show our viewers and listeners what a frenzied market looks like. I know you've just given us a little bit of evidence of that, but I want to contrast what a strongly growing market looks like in terms of the information on our research hub, and what a flat market looks like. And in a little while, we're going to talk about the type of markets we think that people should be getting in. We call them the second wind markets. So let me just share my screen.
Terry, while you're doing that, just a reminder for everybody, we are planning to be chatting for about 45 minutes today, which puts us in AED time. We're looking about 1:45. We'll open it up to questions. So by all means, feel free to use the Q&A tab and ask any questions along the way. Otherwise, we will leave about 15 minutes for your questions at the end.
Okay. So just to illustrate a couple of examples of what a market looks like that's been growing strongly for some time. This is Davern Park. It's a suburb in Adelaide, in the affordable, or formerly affordable, suburbs in the north of Adelaide. The local government areas of Playford and Salisbury, where there's a collection of suburbs. There's 8 suburbs with Elizabeth in the name. And a couple of years ago, they all had median prices in the 200 and 300,000, and now they're all $400,000 and $500,000. Davern Park is probably arguably the most down market suburb in all of Adelaide. Now look at this, is what you see on your screen is the 5-year median price trend graph. And you can see how prices have been growing incredibly strongly since about the beginning of 2021 down here, still growing. The curve is just going up and up. And Davern Park's median house prices increased. This figure here, 35% last 12 months, and its 5-year growth average, 23% per year. Fantastic performance. Anybody who bought in a market like this 2, 3, 4, 5 years ago, be a very happy investor. But should an investor be piling into a market like this now? We would suggest not. That graph can't keep on rising and rising indefinitely. We've already had 4 years of strong price growth in a market like this. I'm going to show another example of that, which is a suburb of Perth called Medina, one of many. It's in the local government area of Kwinana, before the recent uplift in the Perth market, the most affordable section of the Greater Perth market to buy houses. And you can see again the trend in the graph for the past 3 or 4 years, very steeply upward, particularly in the last 12 months, and that's typical of Perth. Its median price, can you believe it? It's grown 48% in the last 12 months.
And it looks like it's growing, not only growing quickly, they're bloody selling quickly. 8 days on market. That's very low.
This is a definition of a frenzied market. This is not the sort of market you want to be piling into. You don't want to be buying in a market that's had a 5-year growth average already of 23% per year, including 48% in the last 12 months.
We would, you'd never in recent history say that 2.36% vacancy rate is by any means alarming, but that's quite high for what you're seeing all over the country lately.
Yeah. Well, it's one of the indicators that the Perth market has peaked, and that the impact of so many investors buying in this market for the last 2 or 3 years is starting to have an impact at various ends of the market, including rising vacancy rates and an end to the rise of residential rentals. Dangerous times to be getting into that market because it's very much at a peak. Now, to show you what contrast, and to also illustrate the point that we have such regional differences in property markets across Australia, we've just shown you two boom markets. Now, take a look at some of the markets that aren't doing quite so strongly. The ACT market, Canberra, has been very flat, and this is the one of the key regional suburbs in the north of Canberra. You can see the market has been very flat. There was price growth in this market from 2020 to towards the end of 2021 into the early part of 2022, but it's been flat since then, no growth in that market. Fundamentally because the ACT economy has not been pumping as strongly as the Western Australian or South Australian or Queensland economy. So that's what a flat market looks like, and it illustrates the point we don't have extraordinary growth happening everywhere in Australia at the moment. Melbourne's another one of those markets that's been flat for the last couple of years, and Cranbourne is a suburb, one of the more affordable suburbs in the far southeast of the Greater Melbourne area. And you can see that this was a market, like most of Melbourne, had very good growth from 2020 to around the end of 2022. And since then, prices have come back a little bit and have been essentially flat for the last 2 years. But for those of you who own real estate in Melbourne and are starting to despair that you're ever going to see capital growth again, just have a look at what Melbourne, typical Melbourne suburb, did in the 2 years from 2020 through to the end of 2022. Exceptional growth. It will happen again in the future. The question is where, when, and we'll talk a little bit more about that as we go through the presentation today. Okay, so I'll unshare my screen.
Well, Terry, something I wanted to sort of reflect back on before we move too far away from Perth. But as I said, when you first put the Joondalup precinct into the Best Buys back in 2017, I dare say there was a few people said, "What are you talking about? You know, doesn't Perth just have boom and bust?" What's the methodology behind picking a location like that hasn't had a strong history of growth?
Well, as you pointed out earlier, the past does not inform the future. And that's one of the fundamental catch cries of what we do at Hotspotting. We're always looking for change, and markets do change. We've seen what's happened. I just showed you some illustrations of markets like Canberra and Melbourne, where there was strong price growth for a couple of years, but in the last 2 years, there's been no growth at all. Something changed fundamentally in those economies that caused that to happen. Whereas in Perth, we've seen the rise of prices in Perth because there was an improvement in the Western Australian economy. Population growth started to result from that, and investors saw that the Perth market was affordable, had good rental yields. Maybe some people started to follow our advice back in 2017, and subsequent years we were starting to recommend locations in Perth. And the reaction we were getting at the time from people is, why are you recommending the Perth market when it's actually shown no growth for 10 years? And that was the case back then, that we'd had 10 years in which prices had actually come back. No growth and some year-by-year decline. On that list you showed of the top 10 we published in 2017, there were other markets were in a similar category. The Sunshine Coast was, and that was a market that it also had no growth for 10 years, and people were also questioning our wisdom in recommending that market. But we knew big things were coming up in the way of change for the Sunshine Coast, and from about 2020 through to 2023, spectacular growth, some of the biggest growth anywhere in Australia in some of those years on that Sunshine Coast market. But that's situation normal. Situation normal is Australia. We have a very big country. Real estate is local in nature. We don't have the same situation happening everywhere. And the trick for property investors is to pick the places that are on the cusp of a growth cycle, and not frenzied markets, not markets that have already had 3 years of spectacular price growth, but markets that are at the beginning of a growth cycle. And those are the ones that we try to identify in our hotspots reports, and in particular in the new edition of National Top 10 Best Buys, which we've just published this week.
Yeah. And Terry, in terms of what you just mentioned around, having stellar years of growth year on year, it really does differ. We'd have a different opinion in some locations than we would to other. Toowoomba, as an example, has had significant growth in recent years, but that might be a market that we would still say that there's still room for further growth in, because we have an enormous infrastructure pipeline that is still to come. And I know in previous webinars, we often talked about when major projects are announced, you get a bit of a hit of people jumping in there, and there's a bit of growth. And then when they start to turn dirt, you start to see another wave of growth, and then ultimately when it's delivered. So Toowoomba, in a lot of ways, is really in between stage 1 and 2 right now. Would that be fair?
That's right. I think that's very fair. It's a good observation. Toowoomba's had some growth already, but it's really at the beginning of a big cycle, inspired by major infrastructure. That's one of the key things we look for. That's one of the key creators of change in markets. That's why the Sunshine Coast market changed so dramatically back at about 2019, 2020, when we were really starting to highlight it as one of our top picks nationally, despite the fact that it hadn't shown any growth for 10 years. A big infrastructure spend was in the works. Toowoomba is also having that now. Some of those things are already done. The new airport's in place, the Wellcome Airport, the second range crossing is done, but the big ones are still to come. The Inland Rail Link hub is still to come. That's under construction, heading north through New South Wales towards Queensland, and Toowoomba's the big hub in Queensland for that it's the biggest national infrastructure project in the country, $31 billion under construction. There's also a $1.5 billion hospital they're just about to start building.
I think it's under construction now.
They're really getting underway with it. And those sorts of projects create lots of economic activity and jobs during construction, but even more when they're finished, because the impact when they're up and running and operational, and that big hospital is employing, maybe 5,000-6,000 people. The demand that will create for real estate, new people coming to live and work in Toowoomba because they've got a job in that new facility, is going to have a tremendous impact on real estate. So that's the kind of change that we look for. And that's why we're sometimes recommending areas that haven't had a great track record in the past. And people are wondering why we're recommending this low performer. As we've said already today, it's worth repeating, the past does not inform the future. And we're more interested in the future than the past when we recommend areas for people to buy.
Very good. So we've sort of talked about market cycles. We've talked about some trends like the rise of units, but there's another trend that we've talked about many times this year in that second wind markets. Did you want to touch a bit on that?
Yeah, well, I think that's a good segue into our start to talk about our forecast for 2025, because so far in the discussion today, we've talked about kind of our review of 2024, what happened and why it happened, which markets performed and which haven't. But we're expecting some different things in 2025. Now you're going to be reading and seeing in various forms of media, various forecasts around about now for what's going to happen next year. And what I often find is, particularly with the economists, what they do is that they actually forecast the recent past. They take what's now happening and extrapolate and say, this is what we expect to happen next year, because they really don't have any idea. We tend to think that we have a better idea of what's coming up because we're specialists in the field and the big bank economists aren't. So we're expecting different markets to perform in 2025. I've seen some forecasts that it's all going to be the same next year. It's going to be Perth, Adelaide and Brisbane again. No, we don't think so. We don't think Perth is going to be that big performer next year that it was this year. And we think there's going to be some markets that haven't been to the fore so far, say in the last 12 months or 2 years, that are going to actually be surprise performers or surprise for some people in 2025. So, and that's reflected in our selections for the new edition of the National Top 10 Best Buys report. None of them are markets that are pumping really strongly right now, but we expect that as 2025 moves on, they're going to start coming to the fore. Some of them will be the markets that we call, as you pointed out, the second wind markets.
Yeah.
And it might be a good time to once again share my screen and show you what I mean by that. So, okay, one of the markets that we're highlighting, excuse me a moment, is the Sunshine Coast. Now, this is a market that we had, as you've shown earlier, Tim, we were highlighting back at sort of 2017, 18, as a market that was going to perform in the future. And from about 2020 to 2023, it was a huge performer. But for the last, say, 18 months, the Sunshine Coast market has been in that pause phase at the end of a growth cycle. And this is Coolum Beach, which has been a great performer, both the house market and the unit market, which is perhaps a better illustration. You can see the growth from, say, late in 2019 right through to about the end of 2022. This is typical of a suburb on the Sunshine Coast, very strong price growth. And you can see that for Coolum Beach units, the 5-year growth average is almost 17% per year, which would startle a lot of people, but it speaks to the point we made earlier that unit markets are now really performing really strongly on capital growth because there's growing demand from all sorts of buyers. This market has flatlined for about 18 months, and now you can see it's now starting to rise again. This is what we call a second wind market. Had a sprint, it's paused to catch its breath. Having got its second wind, it's now starting to take off again. So Coolum Beach.
And Terry, is it worthwhile just going down to the bottom of the screen there to show people the when we're talking about the price predict index categorizations, we're talking about sales volumes. And as we can sort of see here, that last sort of 4 quarters, we started to see it started to pick back up. And that rising sales activity is what we're looking for, as it tends to be a precursor to price movement.
Yeah, it's a great example. Those two graphs working together, because here we can see price sales activity falling away quite sharply in this location. That coincides with this. This is when prices stop growing. Now we're starting to see sales activity rising again, and we've seen 3 quarters of significant growth in sales activity. This is a sign that this market is on the rise again. And that's why we monitor sales activity for the price predictor index every quarter, because we think it's a precursor of what's likely to happen with prices in the short term. Let me just show you another typical second wind market. One of the markets that we like a lot is Albury-Wodonga, which is a very, very strong regional city at the border of New South Wales and Victoria. It's actually in 2 states, the Albury parts in New South Wales, the Wodonga parts in Victoria, separated by the invisible line on the map, but they operate as one city. Lavington's one of the more affordable suburbs in the city of Albury-Wodonga. We think it's the second wind market as well. You can see, again, very, very strong price growth in this market from about 2020 up to the end of 2022. Then that market reached the peak in its cycle, and it's been flatlining on price for, say, past 18 months. And now you can see it's just starting to nudge up again. And we're starting to see that in the sales activity figures as well, that buyer demand is starting to grow again for suburbs like Lavington and others that make up the...
Just so affordable to think you can buy there, sub 500,000 and that's a house price, mind you, as well. 3 or 4 bedroom homes, for under 550, reasonably modern as well. And, you're in a population of, just over 100,000 there. Really strong, diverse local economy, major infrastructure projects. Inland rail, again, is another big one. So these are markets that really excite us. We've got really strong, population base, as well as really affordable pricing. So that's where we're getting those stronger rental yields.
Indeed. Now, again, as you've pointed out, the correlation between the sales activity graph and the price graph, you can see that here, as well, growing strongly in this location, but sales activity started to fall away here and it dropped quite alarmingly there at the end of 2022. And that's when price growth stopped. But now we're starting to see sales activity rising again. For the last, say, 12 or 18 months, there's been a significant increase, even though a slight dip in the latest quarter. It's still well above where it was, say, 18 months ago. So buyer demand is rising in the suburb, and that's why we're starting to see the price graph starting to trend upwards again.
Yeah.
Something for people to look out for. So
Worth noting, Terry, just as a side note, but on the last quarter that we show on the sales volumes, it's worth noting for our viewers that, and especially any members that are using our research hub, there's a bit of a lag time between, sales occurring, on a weekend and it actually showing up in this graph. So we often see by the time we get, an updated results on sales volumes a quarter later that they backtrack and it actually increases a little bit. So you can often see that little bit of lag. So if you see a slight little drop on that last quarter, it wouldn't be anything to be too concerned about.
the trend very much is upwards. But
Yeah.
say to people, the real estate graphs are never completely smooth, and you can see that with the price graph. It hasn't just gone up and up. There's been periods where it's sort of leveled out and then gone again, and here there's a bit of a dip, but then it's continued to rise. And that's also true with sales activity. The graph is never completely smooth. What we're looking for is the overall trend, and the trend here with sales activity in the suburb of Lavington is very much on the rise, and that's why we classify here on our research hub as a rising market. But one of the points that's worth noting is, in contrast to those frenzied suburbs I showed you earlier in Adelaide and Perth, where days on market were 8 or 10, here days on market are 41. That's what you might call a normal market. You can actually go to a market like this and have a better chance of buying with due diligence, buying carefully, considering what you're buying, putting in an offer. You're not competing with 15 or 20 other investors trying to buy in the same market. In Perth and Adelaide, you're probably having to pay more than the asking price to beat the competition. And a market like this, before it really becomes strongly into the growth cycle, you've got a better chance of buying well, maybe even buying below the asking price and setting yourself up for the future growth phase.
Terry, just really quickly, I know it's a bit of a side step, but could you click on calculators for me and go to stamp duty? I just wanted to show everybody, the difference between buying in Albury, which is north of the border in New South Wales, and buying south of the border in Victoria. Stamp duty on a $550,000 property in New South Wales. Let's put that. I'll go 500. That's fine. New South Wales as an investment. You're looking at $17,390. It's worth noting that in New South Wales, unless you're buying within a trust, if you're just buying as a normal investor, you won't have any land tax until you reach the $1 million land holding. If we go across to Victoria and do the exact same purchase, you jump up to $26,500 in stamp duty. This is 2 minutes away in Wodonga, rather.
West Wodonga as opposed to Lavington.
Exactly. And not only that, we will start paying land tax here in Victoria when your land component is $50,000. So this is just a point to note that it's not always just about, the real estate. It's about the state. It's about the laws. And, if you're really smart at looking at where you're buying, you can save yourself a hell of a lot of money, not just in the short term, but in the long term in terms of tax too.
Yeah. So the next suburb I'm going to show you may sound like a bit of a contradiction in terms of what we just said, because I'm highlighting an opportunity that exists in regional Victoria, in the regional city of Ballarat. Now, it is true that some investors are a little bit reticent to buy in the Victorian market because of the attitude of the state government. Increased taxes, you'll be paying more land tax there. Stamp duty is higher. But nevertheless, there are opportunities to buy well in this market. And we do think that we're going to see better performance in the Melbourne market in 2025. And we're going to see better performance in some regional Victorian markets, including Ballarat. Now, this is another classic second wind market. The big difference in Ballarat is that prices didn't flatline after the peak of its recent graphs. So they've actually come back quite a bit. That does mean that there's some very good buying in this market. It's just a case of whether you believe Ballarat has a growth future. We think it does. We think it's a very strong regional city, well connected to Melbourne. There's good economic activity creating jobs in that area, but it's been through a down phase. This is the suburb of Telecom. Fantastic growth up until the end of 2022. Prices have come back a bit for about 12 months and then they're flatlined. We're starting to see rising activity in this market. We think it might be an opportune time to be considering getting into a market like this, because while this suburb of Telecom has a median house price in the low 500,000, there are 7, 8, 9 suburbs of Ballarat where the median house price is in the 400,000. So it's an opportunity perhaps to buy well at the bottom of the cycle. Days on markets, almost 50 days to sell a typical house. That means you have an advantage of a buyer. It's a buyer's market, not a seller's market. And that's the sort of market that a smart investor will be thinking about getting into, provided you believe that the location, in this case Ballarat, has a strong future, and we would suggest that it does.
Yeah, I think the point on that, Terry, is that, all investors in real estate, it's a bit different to trading shares, isn't it? We hold real estate a hell of a lot longer than we might if we're a speculator on the share market. And the reason I bring up that point is that if you're buying into a market that you think, oh, this is the next big hotspot and we want to jump into here like Perth, the reason people are doing it is they want fast growth. Everybody wants, strong capital growth. But I want to emphasize that when you're buying in markets, this is why we gamified the days on market, is to show people that if you're buying in a hot market, it's much harder to buy under market value. Where I see Victoria right now is that it's probably not going to be the market that's going to take off anywhere near as quickly as some other markets around Australia, but the opportune time to buy is when others aren't, and there's a lot more stock on market. So this is where you can buy under market value, and that is your growth in reverse.
Yeah, absolutely. And you'll note that our classification now for the suburb is rising. Sales activity is starting to rise again. But days on market are still 46, so it's not highly competitive.
Yeah.
For real estate investors with vision and a long-term view, this might be the sort of market that you should be considering, rather than getting into those frenzied markets like Rockhampton and Townsville in Queensland now, where it's incredibly competitive, and as Perth has been for the last couple of years. Just want to share one.
Be greedy when others are cautious, and cautious when others are greedy.
Exactly right. And it's not just in real estate, but in other spheres of investment as well. Warren Buffett, one of the 5 richest people on the planet, net worth of over $100 billion, that's US dollars, is very much of that philosophy. In fact, that might even have been his quote.
It was.
Tim.
Yeah.
Yeah. Now, I just wanted to show something else while I'm sharing my screen. This is this one. This is the soon-to-be published summer edition of the Price Predictor Index. This is our we always have a national top 50 supercharged suburbs, places where the pattern with rising sales activity is really strong, and because we see that as a precursor to future price growth in the short term. And there are locations that are made our top 50 in New South Wales, in Victoria, in Queensland, South Australia. But I wanted to point out down the bottom here, there's 3 locations in Darwin, and this is going to be one of the markets that we think will surprise everybody in 2025, because it hasn't performed for the last couple of years. It's been a very stagnant market in terms of prices, but you can see we've got down here Darwin City, we've got the inner city suburb of Larrakia, and we've got the inner city suburb of Stuart Park, all unit markets. But you can see the trend here in these 3 markets in the last 4 to 5 quarters, strong upward trend in the number of sales being made. This means buyer demand is rising. And we're starting to hear anecdotally more and more investors are interested in Darwin because A, it's very affordable, B, it has the highest rental yields in capital city Australia. And there is increasing evidence that the local economy, which has been weak for the last couple of years, is starting to improve, and we're starting to see economic growth. There's a lot of big projects actually targeted on the Northern Territory, and some of them are starting to happen, and that's going to create jobs and therefore demand for real estate. So we think Darwin's one to watch for investors.
No land tax is a kicker.
Yeah, absolutely. There's all sorts of good reasons now to consider that this might be the opportune time to get into the Darwin market. But the typical investor, being a herd animal, will probably wait till they read there's a boom happening, maybe 12 months from now, and then want to get into the market. I think it's worth considering getting into a market like this right now. Okay, so we've talked a little bit about the Sunshine Coast as a second wind market. We've talked about Albury-Wodonga in similar terms. Darwin as a market that might surprise next year. We've talked about Ballarat. We think that Launceston and Tasmania has possibilities as a second wind market. It's interesting to note that Pippa, Property Investment Professionals of Australia, did some research recently. Where has been the best capital growth in Australia over the past 20 years? Who's top of the list? Regional Tasmania. That would surprise a lot of people. So that market has been very flat for the last couple of years, but there is evidence that the Tasmanian economy is on the improve. And a city like Launceston, others in the north like Burnie and Devonport also were worthy of consideration, but buying now before they become busy growth markets. We also have some markets on our National Top 10 Best Buys report that reflect our belief that apartments increasingly are markets to be in. Some inner city markets, like Melbourne in particular, where you can buy quite affordably apartments close to or actually in the CBD of Melbourne, with good prospects for growth as that market improves. So probably before we go to questions, because we did want to allow a little bit of time for that, Tim, is perhaps just a word about interest rates, because there's endless conjecture in media, daily speculation about what's going to happen with interest rates and what impact it's going to have. We do tend to think that it's a factor that's highly overrated. And as we've seen in the last 2 years, despite the fact that we had rising interest rates in 2023, persistently high interest rates in 2024, we still had markets performing really strongly, boom time price growth, despite high and rising interest rates. Contrary to the general theories of the big bank economists. So at some point in 2025, there will be interest rates cuts. That seems to be a near certainty. It's just a question of when, but don't wait for it. It's not certain as to when it will happen, and the impact it will have on the market will be considerably less than some of the speculation.
I would say that we're probably getting later and later into the year. We listen to all the economists in terms of when they're expecting that rate cut now, though.
Yeah, but it changes doesn't it? Like all forecasts by the bank economists, they change quite rapidly, influenced by the latest data. So the next piece of information about unemployment or about inflation or some other key economic indicator, the forecast of when the interest rates are going to be cut will change yet again. So some are still saying it might be March, others are saying it might be May or later. But for us, it doesn't really matter. If you're ready to go, don't wait for it. Get on with it and consider some of those markets we've highlighted today, which are what we call the second wind markets. Markets with potential for growth, but not yet frenzied and competitive.
All right. Well, that brings us up to question time. Before we do that, obviously feel free to jump in and add some questions to the Q&A. While people are doing that, we also said that we had some special offers for people that were attending today. So the first one, I'll just make sure you can see that. Yes, you can. So for anybody who is interested in our National Top 10 Best Buys report, we've just launched that with our list of the projections for 2025. As we mentioned earlier, 5 locations in capital cities, 5 in regional markets, none of them in frenzied markets. And I think that's the important piece. So if you like what you have heard today in terms of buying at the right time and in areas that are going to show long-term capital growth, as we started today's session with, we quadrupled the national dwelling market in last year's, and we've got some really high hopes for what we're going to achieve in the next 12 months as well. So feel free to use the QR code there. It is on sale for $249 right now. Or if you wanted to snag a bargain, we also have a deal which is called the best of the best bundle, which if you were to buy all three of these reports individually, it would total $597, but we have them on sale now as a bundle for just $399, which is a saving of nearly $200. So what that includes, the national top 10 best buys, which we just spoke about, also one of our best-selling reports, the national top 10 positive cash flow hotspots. Let's face it, we are still in a high interest rate environment and people are after the cash flow. In fact, one of our next questions that's already popped up is about that. And then lastly, that stamped the Australian Property Guide report. Now, that might not be one that people just rush out and buy all the time, but I want to talk about the value in that. If you listen to what I said about the stamp duty implications of buying in Albury versus Wodonga and the land tax implications, and also for anybody who's a first home buyer, this report details every single state, the buying process, the different stamp duty, land taxes, and all those types of things. So it's a fantastic guide, especially if you're just starting out. So that QR code there will give you access to our best of the best bundle. So take advantage of that. That will be available through to the end of December. And then last but not least, I suppose by way of reflection, Terry, 2024 was a big year for us. We've spent a hell of a lot of time and money on innovating our members portal. We started our own TV show on Ticker, which is called the Property Playbook. So if anybody hasn't seen that, be sure to jump along and have a look at our TV show. We've got some really great guests coming up in the new year, so keep your eyes out on that. And then lastly, something we've been working on for the last 2 years, which we're incredibly excited about, is in the new year, we will be launching a property investment course. This is something that Terry and I have piled, 2 years worth of work, but hours upon hours in recording and compiling everything that we've learned over our career into what we think is probably one of the the most comprehensive property courses that you will find. So we're offering an opportunity for people to register their interest in that. We will have it on sale in the new year, but anybody who was to register their interest and tell us that you're interested, you'll get access to some early bird specials as well, and some of them are quite significant. So I won't leave that on screen for a minute while we go to questions. So let's start with, is it possible to buy, sorry, this is from an anonymous attendee, but is it possible to buy a positively geared property in 2025 using an LVR of 80% and a budget of 400,000? My point on that, well, obviously we've got a good report that'll help you with that. But secondly, I'd say that's probably the best opportunity to be getting positively geared property. The lower you go in price on an 80% LVR, the more likely you are to get that positive cash flow because, as an example, some areas in regional Tasmania, and we've been personally helping people in that market over the last 12 months, including yourself, Terry. We can buy in that market under 400,000 and, be getting well over a 5% rental yield in some cases. And that's a standalone dwelling. So it's absolutely possible to be getting that. And, Terry, through our Pulse report, there's probably many other examples of that.
There are lots of examples across the country. Many of them are in regional Australia, but when we choose our top 50 locations for the Pulse report, the main criteria is they have above average rental yields, but we also require them to be places that have got credentials for capital growth, because there's plenty of cheap markets with high rental yields, but you're never going to get any capital growth there because it's, a small country town, for example. We've seen in the last 12 months spectacular capital growth in these locations that we selected primarily for their potential to be positive cash flow because they've got rental yields of 6 and 7%. One of the points that should be made here is that don't just think in terms of houses. Start thinking in terms of units as well, because generally speaking, you can buy more affordably with units. The rental yields tend to be higher. Sometimes you do have additional costs, but quite often, if you're buying in a small unit in a small block, you're not going to be having high corporate fees. So the rental yields are better. The buying prices are lower. And what we're seeing more and more is the capital growth prospects are good, provided you choose your location well. Provided you buy your unit in a growth economy and a regional centre with great growth prospects, a growing population, creating jobs, etc. You're going to be getting good capital growth as well, because we're seeing that more and more in the numbers. So don't overlook units when you're trying to fill that equation you've just articulated there.
Yeah. All right, we've got heaps of questions, so I'm going to punch through. So the next one is, in previous years, Perth property has increased sharply in a short period and then decreases after that sharply again. Is this possible to happen again? I'm trying to work out if we should sell our WA property because it is increased and therefore might decrease, or not, or hold on for another 5 to 10 years is what they're asking.
And it's a concern that's shared by a lot of people. Will Perth do what it did in the past, say 10, 12 years ago?
Yeah.
I tend to think not. I think the state government in Western Australia has been very aware that their economy has been very, very overly reliant on the resources sector, and they've worked quite hard to try and change that, to try and develop other industries so it's got greater diversity and strength. They've had a certain level of success with that. So um, I'm not expecting that when this Perth boom comes to an end, and I'm expecting that to become evident in 2025, that prices are going to drop dramatically like they did 10, 12 years ago. There may be some flatlining, maybe a little bit of coming back in price. But people whose wisdom I trust tend to think that the pricing that Perth is at now is pretty much true value for Perth. It was undervalued previously, which is why it's had its boom. It's now sort of back up on a par with those other cities, and it's probably going to stay roughly there. So I wouldn't be in too much of a panic to sell with concern.
There's that, but there's also the fact is that, why have we been able to have such strong growth throughout Australia in a lot of these markets? Because of the undersupply of housing. Prices just can't drop out of the sky with a necessity like housing. WA has had such a shortfall in housing and rentals for a long time. And I'd say, I don't know your name, but Anonymous, but I would say that you've probably got quite a strong rental yield there. So if the market does have a correction, it's an on-paper loss. As long as your tenants keep on paying, and they're not going to come and ask you for a discount on rent because your property dropped by 20 grand, I would say you can probably hold on to that quite comfortably for years to come. And inevitably, every market's going to go through ups and downs.
Yeah. Absolutely.
Next one is, if you only have 5 years before retirement, is Victoria the right market? You want to have a go at that first?
Look, I mean, it's a possible answer to your question, but there may be better answers. At 5 years to retirement, presumably you're looking to buy somewhere where you're going to get pretty good growth in the next 5 years. Look, there are opportunities to buy well in Victoria, but to get the sort of growth you might hope to get before retirement age comes along, I'd perhaps be focusing more on Queensland, because that's where you're most likely to get major uplift. Just avoiding those frenzied markets in Queensland, but there are plenty of other possibilities. We talked a little bit about Toowoomba earlier. We've got other markets like Mackay, Gladstone, Bundaberg. They've all got good prospects. You can buy affordably there and expect it, because the internal migration numbers are so powerfully strong for Queensland. People are leaving the big cities and moving to places like Queensland for the affordability and the lifestyle. So provided you choose your location well and buy the right property at a good price, that might be the place to focus to get the best results for the next 5 years.
I might take a different path on this and say, getting a bit of echo, sorry. Can you hear an echo with me?
No, you're right.
I was just going to say, I might take a different path on that and say, whilst I don't know your circumstances specifically, so it's not tailored for you, I do hear people a lot of the time saying, I've got X amount of years to retirement, I need to buy this because of that window. But I just wanted to take a different approach and say, just because you retire in 5 years doesn't mean that you need to sell that property in 5 years. And where I've seen a lot of customers go wrong, and this is why it's worthwhile having a good chat with a good financial planner, is that most of the time you'd be better off drawing down on your superannuation whilst you hold that property for years to come, because that property is likely to continue to grow faster than you're spending your super. So a lot of people have made the fatal mistake of selling a property to top it up in super when it would have outperformed by keeping it. So maybe think about chatting with a financial planner and say, I'll buy real estate for the long term and hold that, draw down super, sell that when you run out of super. That's what I'd be saying. Another one is there a suburb in Adelaide where you could recommend to buy in 2025? we sort of touched on Adelaide a little bit about sort of really strong performance over the last couple of years. What's your take on that, Terry?
Okay, it's really hard to find a place that hasn't already had extraordinary growth in the last couple of years. I'm struggling a little bit with that question because I'm asking myself the same question. Mount Barker might be one answer to that question. I do like the prospects for further growth in Mount Barker. It's up in the hills area now. The Adelaide Hills is for me, one of the great residential markets in Australia. It's probably a hill change market. It's only 30 minutes to the CBD of the capital city, which is almost unique in Australia. But most homes up there are $1 million plus. Mount Barker is much more affordable. It's got great infrastructure. It's still close to the centre of Adelaide, but much more affordable than the more expensive suburbs of the Adelaide Hills. So that's probably the one that stands out for me in Adelaide at the moment.
Terry, we've hit 2 o'clock, so I'm mindful of everybody's time. So we're going to wrap things up. There's a heap more questions. I really want to thank everybody who's come along. We've had a fantastic turnout today. Lots of questions, which we're not going to get to all of them today, but I'm just going to pick a couple of locations that people have asked and we'll bundle it together. So really good question here. What made you choose Ballarat over Bendigo? What do you think of Ipswich? And what do you think of Bundaberg? There's a few of them in there.
Mainly because whereas Bendigo's flatline, Ballarat prices have actually come back, and so there is opportunities to buy better value perhaps in Ballarat right now. I do like Bendigo. I do have investments in Bendigo's, so I'm hoping it's going to do well too. But I just see that Ballarat's a special opportunity because prices have dropped there, whereas they haven't in Bendigo. What were some of the other?
Ipswich, LGA, and then Bundaberg.
Ipswich, the more affordable end of the greater Brisbane market, has had pretty good growth in the last 3, 4, 5 years. It will continue to grow. It's a place where there are lots of jobs nodes, affordability and lifestyle. But it's harder to find those absolute bargains. A few years ago, you could buy houses, say 400,000, but those opportunities not so prevalent anymore. Nevertheless, there will be future growth in Ipswich.
Yep. All right. Well, just putting on screen, last chance to take that QR code for our best of the best bundle. Recommended retail price of $597, on sale for $399. And then lastly, if anybody's interested in registering for our property course, the QR on screen there as well. Just wanted to take this opportunity to thank everybody for joining us, not just today, but throughout the year. We want to wish you a very Merry Christmas, all the best for 2025, and we look forward to seeing you when we first come back, I think second week of January as our first webinar. So stay tuned for that. Terry?
Thanks, Tim. Yes, I'd just like to endorse what you said. It's been a great year for our business. It's been a great year for Australian real estate in many ways, so with all those wonderful contrasts and differences across the country, but opportunities for investors and home buyers to do well, and we're expecting to see more of that in 2025. So wishing everybody the best for the new year and for Christmas, and look forward to having a continuation of this discussion in webinars in January and beyond in the year to come.
Very good. Thank you very much, and we'll see you in 2025. Thanks.